All right, Bulls and Bears. Hey, we're back with another dose of economic reality. It's great to be back with you. I apologize that I missed yesterday's video. I didn't put one out yesterday, just basically too busy, a lot of stuff going on. So we're going to try to pack a little more into today's report. Got a lot going on, folks. We are seeing the people, most people anyways, getting further and further pulled behind or pulled under the debt wheel. And while home prices were going up rapidly, a lot of people that were going into debt, they looked at their home values and they said, well, it's not that bad because now my home equity is worth this, my home's worth that. Went up pretty rapidly. The year over year numbers are still up, but not as big as they were. In fact, a lot less than they were from 2020 to 2023. The home price gains have now leveled out in many areas and actually even dropping in a few areas now. If you look at Florida, if you look at Texas, many cities are actually dropping. Look at Austin, Texas. They're underwater big time if you bought a home in the past year in Austin, Texas. But nationwide, even the acceleration has really slowed to a dwindle, and people are starting to get concerned. They're saying, okay, the cost of living, inflation was supposed to come down. My home equity is not going up as much as it was. I'm barely above water right now. I can't borrow against my home if there's an emergency. So we got a lot of news to get into. We're going to talk about that topic first. People getting buried under the debt wheel. So we see more assistance coming out here, more programs to help people. Even though they're trying to convince everybody that the economy is strong and that everybody's fine. If everything's fine, why would we be seeing things like this? A new law making it easier to tap 401k savings for emergencies. Right, so there's a new you can take out $1,000 from your 401k and without penalty. All right, there's some stipulations. It's got to be for certain types of emergencies or financial hardships. From what I read, like a emergency automobile repair, stuff like that. But just the fact that we have to do this, that should be a big eye opener. And the reason they had to do this, and something we reported on here on this channel many times over the past year and a half, that record withdrawals were happening, record 401k hardship withdrawals. People were paying these big tax penalties for taking their funds out early, even though it's supposed to be your money. The government knows better what to do with it than you do. They know better than you, so they're going to penalize you for taking it out early, even though you may have a better use for it than just sitting there making hopefully good interest. But if it's in the stock market, you've been doing pretty good lately. Markets hitting new all-time highs, new all-time highs, new all-time highs. And, we have to go back to that and talk about that on that note. People thought that Joe, couldn't barely put two sentences together. They thought the stock market might crash under him because he couldn't put two sentences together. He was very difficult to understand. Very difficult to understand. Did that affect the stock market? No, the stock market's not meant by what the politicians say. It's meant by what the Fed says. The Fed can really put some fire under the market just by a few remarks, talking about rate cuts. That could really make the stock market go up, or the possibility of rate cuts. So we know how that works, folks. It's the bankers, it's the people at the central bank, the Fed. They light the fire under the markets. They guarantee, along with the FDIC, that the banks are going to get propped up no matter what, no matter how many bad loans occur, that the banks are still going to be basically rescued, right? Especially the big mega banks, right? So we have this game out here of, who wins, who loses. When you have people picking the winners, when you have certain people, right, a group of people, what we call the puppeteers or the puppet masters. Some people may call them the central planners. They're out there picking the winners and the losers. So it's not about how hard you work anymore. It's about, if you are picked as the winner or the loser. Now, don't get me wrong, hard work still pays off in some cases. Take a look at this right here. I think it's a hard job being a police officer. I watch some of these videos where they're dealing with all kinds of just insane people. Police officers now in Plano, Texas, $108,000. That's how bad it has become, not just in Plano, but in many areas where they have to pay cops now six figures. Why? Because as the economy gets worse, more people steal, crime goes up, And of course, naturally, it becomes more dangerous to be a police officer here. $108,000, 150. Now, it doesn't say if that's the starting wage, if that's the median wage. You know, maybe they're trying to attract people by putting the median wage out there when, you know, you look at the police officers, maybe you've got to be in the police force 5 or 10 years to earn that median wage, right? So it could be kind of a clickbait, so to speak, billboard. But it is interesting that we have six-figure jobs out there for police officers. I think they deserve that. It's a very difficult job, in my opinion. Let's go ahead and talk about this here. Wall Street Journal. American borrowers are on shakier ground. These charts show why. Recent article here. Non-mortgage debt, the interest that people are paying is up 50% year over year. That's as of the end of 2023. We're going to see what the 2024 numbers end up being, but we're seeing the debt just continue to explode higher. And the reason we haven't had a 2008 type of downturn yet is because banks haven't pulled back on the credit. Most of you know how this works. As the credit goes the economy. People continue to go deeper in debt. It's going to make it look like the economy is growing. When banks have to pull back on the lending, and in this case, they really don't, because they're being guaranteed a lifetime get out of jail free card. This could go on for a long time. And this is the problem that we see in countries that went into hyperinflation, right? Went to hyperinflation. So will it happen here? I mean, it doesn't look like the dollar is getting that weak. The demand for dollars is still there. Now, is the demand real demand, or is it just central banks somewhere with unlimited funds available at the click of a mouse buying up all the US debt, all right, and keeping rates suppressed? Normally, when you see massive currency devaluation along with massive money printing like we're continuing to see, you would see rates spike up because there would be a drop off in demand for that denominated debt, in this case, dollar denominated debt. But we're not seeing that. We're seeing rates suppressed. There's still massive buyers out there of US debt, dollar denominated debt. So we're seeing that there's still the demand out there. Anytime you have central banks with unlimited currency creation capabilities, you can keep this scheme going for a very, very long time. Something else I wanted to put out here. These young kids here, these young people, they were out shopping with I believe their mother. And what they found when they looked at food prices was pretty shocking to them, and how much they had to work based on their wages for what things costed. I think this is pretty smart for this mother to do that. Let's take a listen here. And let's see what they're calling it here. Adulting is hard. Welcome to the real world.
Welcome to the real world.
Like, she's crazy.
So, girls, what have we learned about grocery shopping?
I don't want to be an adult.
I don't want to be adults.
It takes me an hour worth of working, and I still can't even buy this. And it's 3 pieces of chicken. An hour of working doesn't buy me one thing of chicken at all.
All right, so there you go. These, I think they look like kids. They're looking at the real world and looking at what things cost. And more people should do this. I think people should take their kids shopping, especially kids that are just starting to work. And you're seeing that package of chicken with 3 pieces of chicken is an hour of this girl's wages. Now, it doesn't say what state she's in, how much she's making per hour. But anytime 3 pieces of chicken costs you an hour worth of labor, I mean, you might want to think about, is this supposed to be this way? Is this normal? No, it's not normal. We know this has all been at the hands of massive currency creation and lots of other things that go along with it, right? The outsourcing, how difficult it is for farmers now. Farmers having a very tough time getting shut down all over the place because the cost of operating a farm is skyrocketing, the cost of energy, the cost of even the cost of feed and fertilizer, right? Massive price explosions everywhere you look. And of course, that has a double negative effect on the food prices because producer prices are going up and not as many people producing goods, and not just farms and food, just everywhere you look, not much production, but a lot of demand because of all the currency that's flying around out there. And just for a second, back to what we talked about earlier, it's not just a U.S. problem, it's a global problem. Look what's happening over in China. China surprises with rate cut, right? Rate cuts, even though China, like many other countries, including the U.S., cost of living really punishing people, but they're going to cut rates. That's crazy. And that's what the central bank's talking about doing here in the US, cutting rates. Even though rents are up 20 to 30%, even higher in some areas just over the past 3 to 4 years, people struggling to get by, new programs coming out to help people borrow against their 401k and take out emergency withdrawals without a tax penalty. Folks, these things are happening for a reason. Sometimes I see down in comments, people say, nothing's happening, nothing ever happens. Folks, if you don't think anything's happening as people get buried under massive amounts of debt, and probably the people that are saying that nothing's happening, they're probably with the crowd, unfortunately, that's getting buried under massive amounts of debt. But when people just accept this as the new normal, it's easy to think that it's no big deal, that nothing's happening. In the meantime, a lot of these people will never ever pay off their debt, and they'll be working 2 jobs maybe until they retire. And who knows, will they be able to retire, right? With all the debt going on right now. Something right here: cell phones, clothing, rent, inflation pushes teens into the workforce. And along with this, we have to note the difficulties that young people, even people in their 20s, the difficulties they're having moving out of their parents' home, getting their own home. At one point, it was reported that about half of millennials were still living at home. Now, I think that's changed a little bit, but now teens that are living at home, parents aren't just able to go and buy them their clothes and their cell phones. A little bit of allowance really is not, enough to get these kids what they actually want or maybe even need in some cases. So more teenagers entering the workforce and more adults working second jobs, gig economy jobs, side hustles, more than ever before. And a lot of the jobs that are added every month, we see these jobs added numbers. A lot of them are second jobs being added. So it's not good when you really dig a little bit beneath the surface. Let's talk about this here. Car dealerships beef up incentives as U.S. inflation takes a bite out of demand. So what are they doing at car dealerships? Cash back, lower interest rates. Wow, that's surprising. Price cuts in an effort to clear inventories at pre-pandemic levels. Car manufacturers and dealers are slashing prices to offset softening demand. We saw this in the housing market back when the housing bubble went bust. We saw a lot of incentives, a lot of things that sellers were doing to incentivize people to get into their homes. That was a buyer's market. Are we starting to see a buyer's market in automobiles right now? Average incentive packages offered to new vehicles rose 53% year over year in June. That's according to Motor Intelligence, with manufacturers such as Hyundai, General Motors, Volkswagen offering cash back, low in introductory interest rates, or not introductory, low interest rates and price cuts. So you see these advertisements for new vehicles, you see like 2.9%. I mean, something tells me that they might be raising the prices of the vehicle to get that low of an interest rate, because just the way the Fed funds rate is set right now, that's actually lower than the Fed funds rate. According to JD Power, a consumer analytics company, only 16.9% of new cars sold above the manufacturer's suggested retail price. That's down from almost 35% last year. Wow. So they're actually saying price cuts are happening along with a lot more lower interest rate incentives. So pretty interesting. So maybe a shift to the buyer's market here for automobiles. And it's going to be very interesting. We're going to keep an eye and see how that continues to play out there. Let's jump on over to the housing market, folks. Does anyone here live in Rhode Island? Does anyone want to move to Rhode Island? I think I've been through Rhode Island once, but I don't even think I stopped for gas. The median home price there in Rhode Island, nearly $500,000. The Rhode Island median home price reached $494,000 last month. Folks, Rhode Island, almost a $500,000 median home price. Looks like a nice place. I've talked to people here, chatted with people here that are from Rhode Island. Nothing against Rhode Island, but is it worth a $500,000 median home price? Is it that great? Is the weather that great? I heard the winters are not too fun there in Rhode Island. Let's move on here, folks. We know what's happening with the students. The students were not able to keep paying their student loans. They have to do another freeze on the payments. And now they're talking about just loan forgiveness completely. And it's so bad now that many of the students can't even afford food. And here's what they had to do in North Carolina. North Carolina, 1 million North Carolina students will get access to food assistance programs. And it's not just North Carolina. We have programs nationwide across all the states, as far as I can see, that are offering these food incentive programs, or what they're calling food assistance programs. It used to be just the single parent, the single mother with one or two or three kids needed food assistance because they had a hard time going to work, because just the cost of childcare sometimes would cost more than what you would make if you go to work. So a lot of these parents, they chose to stay home and they had to get on food assistance because they couldn't work. They had to stay home with their kids. Now it's not that anymore. It's students, people that you would think would be some of the people that are okay, not too many kids. Hopefully, if you're a student, you would think this group of people, students, would have an easy time, easier than most, anyways, buying food. But now we have to have more rescue programs, folks. Look at this headline here. This kind of tells you what's going on. Disconnect from official narrative. U.S. banks now reporting huge losses amid surge in delinquencies. Right? We're way beyond where we were in 2008, yet nobody's afraid, nobody's concerned that anything's going to happen, because remember last year in March when some regional banks failed, they were just rescued. All the depositors were rescued. FDIC went above the 250,000 and rescued the multi-billionaires in some cases when you look at Silicon Valley Bank. And that put a lot of confidence back into the banking sector. The bank runs, or people freaking out basically and pulling their money out of the bank, that slowed down very dramatically now. So everybody thinks everything's been rescued, everything's fine. But is there something big lurking behind the scenes with big money players? We talked about BlackRock in our last report. I think when you see the type of things, I'll just say things, the type of things that BlackRock's been involved in, um, that alone, if it's revealed, could be enough to bring down the entire banking system, folks. Look at this here, another headline that gives you the state of the U.S. consumer. Car repos spike as desperate Americans struggle to make payments. Why are things continuing to get worse? Why every time we look at these headlines, it's worse? Is this recent here? Yeah, recent here. Car repos, one of the major purchases for people, up 23% year over year. Just something else that we talk about here when I say continue to get worse. Every time we look at these numbers, it continues to get worse. Austin, Texas, here's some good news. Things are not getting worse in Austin, Texas. They're actually getting better. Largest price drop year over year. Rent prices fell down 9.5% year over year. So I guess you could say there are some things that are not getting worse. In this case, rents in many cities across Texas and even Florida is seeing dropping rents. So there is pockets of relief, if you look hard enough. All right, everybody, let's go ahead and close it out with this kind of a big picture type of analysis here. Right now, we've got a battle, I think, of good versus evil. We've been told that we're watching a show, but I truly believe that there's a undercurrent of honesty that's ready to rise up as people demand sound currency. And I think we're going to see a big push out of the worldwide central banks, all the way up to the very, very high levels. It's going to be a big push for central bank digital currency, more controls over people and populations and how you spend money, more evaporations of freedoms. But then there's going to be, I think, a pushback as people start waking up and realizing the reality of our monetary system, of the economy, how it's operated just by a few people, how they can create endless amounts of money, right? I think a lot of people are waking up and realizing this is a pretty big scam when you think about it. If you know the scam, then you can do pretty well. I mean, I've done pretty well in stocks myself over my trading career, investing pretty good, right? Picking the right times to get into real estate has done pretty well, but most people aren't really thinking along those lines. But I think a lot more people are beginning to take notice. But sadly, a lot of people don't really have enough to put aside to invest. And I think ultimately we're going to go back to sound money. Now, I'm hoping that's not going to be too far away. I'm hoping within 5 years. That's just my part of it's hope, but part of it's based on what I'm seeing. I think that is a legitimate timeline that I expect to happen within 5 years. But I think we're going to see this push towards digital currency before that, and what's going to happen, folks. You let me know down below. As always, though, keep stacking. Get ready for things to break apart at any moment, but also continue to look for investment opportunities to try to stay ahead of this cost of living curve. I couldn't imagine living here in California without investing. I probably would have had to move out a long time ago, and that would have been very traumatic for a lot of my family, and having to uproot, other family members too, and people that rely on me and stuff like that. So hope everybody's doing well. So hope I didn't ramble too much in this video. Let me know what you think down in the comments, folks. Big love. As always, keep stacking. Bye for now. Peace.